Yeah, good morning and welcome to another one of Solarplaza's webinars. Today's topic is all about rising insurance costs and how to manage them for your solar asset. My name is Selina Gundlach. I'm a project manager at Solarplaza. And in terms of today's agenda, we have three speakers with us. The first speaker is Christian Boll, managing partner at Ernst Burkhardt. He already has 20 years of experience as a global insurance broker, and he will give an introduction about our webinar topics on his experience. And he will also guide the discussion between both Encavis and Capcora. And of course, at the end of the webinar, we have time to answer all attendee questions. And now first, of course, a few words about Solarplaza. So we've been around since 2004 already. In fact, this month, we're celebrating our 20 years anniversary. And yeah, our mission is to accelerate the sustainable energy transition. And in this context, we organized already over 200 events in over 47 countries around the subject of solar PV. And we've built a large network of over 60,000 PV professionals. Now, this is my last slide before we get started with the webinar. If you have questions for the speakers or if you have any technical issues, please use the chat box on the right side of your screen. Yeah, as I said, at the end of the webinar, Christian will ask all the questions you have to our two webinar speakers. And if you want to rewatch the video, if you missed anything, we will also share the slides 2 days after the webinar with all attendees. And yeah, without further ado, I would like to give the word to Christian Boll. Please also, Niklas and Jose, turn on your camera already so the audience can see you. Yeah, can see you. Christian, you're still muted.
Hi, Selina.
Yeah, we can hear
Let's
you.
start. Yeah. So many thanks, Selina, for your introduction. And yes, good morning from my side as well. My name is Christian Boll. And yes, as Selina already explained, I work for nearly 20 years as insurance broker, taking care for renewable energies worldwide. So not only solar, but also wind onshore, wind offshore, bio, water. So basically every kind of renewable energy. And please allow me to introduce our webinar today with a very short story from myself. When I started my working life 20 years ago, the first contract with insurance in renewables was with let's say with one of the today largest developer and asset manager in Denmark, who gave me a phone call and said, "Well, Christian, we need an insurance." I said, "Well, should be no problem. When is the expected COD of the park?" And the person said, "Well, it was last week." And I think this should a little bit show how insurance is seen, or how insurance was seen 20 years ago. But this has completely changed over the last 20 years, and this is why we are here today. So we are facing rising insurance costs across Europe in the solar branch, and what we would like to discuss today is it only my view? Is it also the experience of the industry, and how did finance see this topic as well? And at the end of the webinar, I would like you to take with you that there are new questions which arise nowadays, which said, okay, how do you would like to manage potential rising insurance costs in your portfolio? And there are new terms and definitions like insurance resilience or limited insurance capacities you have to deal with. So it's not that the same situation like 20 years before, that you have an unlimited risk appetite from the insurance market and low premiums across Europe. We we do have a lot of claims, and you basically can read it in the press on a daily basis, and this will have an effect of the solar assets as well, for sure. Um, and yeah, today I have the honor to discuss and evaluate the topic with Niklas and Jose. And yeah, maybe I would like to hand over the word to you, Niklas, just to introduce yourself and have a little bit of um, an introduction for your company.
Thank you, Christian, for the nice introduction. Niklas Will from Encavis. We are one of Europe's biggest IPPs. In my role, I oversee the asset management of operational and plants under construction in 4 countries in Europe. Denmark and Sweden, which are currently not that exciting from an insurance perspective, but Christian, correct me on that. But then we also have Netherlands and the UK in the portfolio, which over the last few years have become quite interesting markets for the whole topic of insurance and security and so on. So that's one of the points I want to contribute on today in this webinar. And with that, I would hand over to Jose to introduce himself potentially.
Yeah.
Thank you very much, Niklas. Thank you very much, Christian, for your introduction. I'm José Muñoz, or José Joaquín Muñoz Osuna, a very long name. I'm actually working for Capcora. Capcora is a financial advisory boutique with the headquarters in Frankfurt. We are active in both in debt and equity transactions in all what is known today as the energy transition sector. So not only photovoltaic wind farms, etc., but also batteries and electric vehicles and other infrastructures around the power sector. Our focus is definitely in Europe, not only continental Europe, but we're not yet moving away from the region where we started our business. And we're targeting mid, small players to mid-large players. So we're not usually will not find us in the very big transactions around the market, but more than anything in the middle field. But to myself, maybe just a couple of words. I had started working for a German bank, Bank, 10 years of experience in project financing, both in infrastructure and renewable energies. Then I've been working further 13 years for 3 different PV developers. And then since last year, I started Capcora as director responsible for the Hamburg. So Christian,
yeah. So many thanks, Jose, and many thanks to you, Niklas, as well. And yes, I would like to start to give you an overview about the insurance situation in Europe. And indeed, as already Niklas mentioned, is that we have a very wide range of insurance topic across Europe. And we have on the one end the Nordics and Denmark, which are discussing right now if they should build a solar park without having a fence and at the lowest costs. And we have on the other end the Netherlands. And when you take the Netherlands in your mouth together with solar, then every insurer is a little bit scared nowadays because it's the Netherlands overtook Spain and Portugal in regards to theft, vandalism, and insured claims. So we have a very wide range, and you can easily triple your insurance costs without having extra investments across that range. And what we like to show you and we would like to achieve today is that we bring all parties together on the table, because insurance should be not longer anymore an isolated topic to give to someone in your company to say, okay, look and take care for insurance. It should be part of the legal and the financial discussion in your strategy, in your company strategy as well, because it will or could have effect on your further financial ability of your projects. But before getting too deep in this topic, I would like to ask you, Jose, first, if you can elaborate a little bit more about the general importance of insurance and insurance costs in your standard financial model, just to show to the audience where are we coming from, or maybe where we are now.
Yes, sure. Well, at the financial model, typically the insurance cost is just one small line reflecting what is the expected insurance premium that needs to be paid during the construction phase as well as during the operation phase, considering only the side of the PV plan itself. That means of the equity investor. And it's very usually, as you've mentioned before, it's very usually neglected or not taken as an important position because first, it's not a big sum as compared to other costs in the transaction, but it is definitely a green light or red light for the bankers, for the lenders to finance a project or not. So in a way, it is a mistake to leave the insurance process for the very last minute in any due diligence process or in any financing process, as it can come with big surprises for everybody, not only on price, as you said, but also on the measures that need to be taken in order for the plan to be insurable at all. Having said that, definitely you have different moments when you need to consider the insurance. One of them is when you're planning a project, when you're presenting the project to a potential lender. At that position, you are trying to look at the future with the help of your advisor, insurance advisor, or your insurance macler, a broker, and hoping to have a clear picture of what is insurable, for how long it is insurable, and for what price. The reality sometimes surprises, as you were mentioning. Spain, Italy, and Portugal, from the beginning, all the projects that I had seen, they all had already not only a fence, but cameras, moving sensors, etc. So quite an intensive equipment in order to make the projects insurable. Probably because of the already known situation of criminality or just vandalism in those countries. Nothing against the country itself, it was just the reality. In northern countries, it was not so common, but now you see how it is changing for whatever reasons. That makes a project that at the beginning, when they were originally analyzed, they were fully insurable and therefore fully financeable. And now they're having a problem with the insurance, either because the prices are much higher or because they're not insurable at all. You can get to a point where a given risk is not anymore acceptable by the underwriters of the insurance, and therefore you need to take measures to improve the security of the equipment, etc., etc. So, as I said, you have two moments. One is when you're planning, and the other one is when you're living the life of your assets.
At this time, I would like to hand over the word to Niklas with my first question to you is when did you start to look a little bit more for insurance compared to the past? Because I could imagine you as head of operations Europe, you also have other topics to take care for, not only for the insurance costs, but could you say when it starts that the insurance topics became a little bit more important to you?
Yeah, definitely. I think there are different points in my time at Encavis where these topics became more important to us. I think the first one is I think we as an industry realized that the financial models, as Jose just said, sometimes have assumptions in them that don't really come true, right? I mean, with the equipment as well that we plan to last for 25, 30 years, we nowadays realize that older assets have issues. And that also was a topic that came up in our security equipment, for example. So obviously you don't necessarily plan to replace your security equipment every 5 or 10 years for cameras that work and so on. So that was definitely a touch point with insurance, and the question in mind, or that we posed to the insurance, was always like, what do you expect? Like, what is the requirement from your side to insure the site? And I can tell you that I still try to find like definitive feedback on that from an insurance for each country that I manage. The other point is, obviously, we've, as a lot of developers, IPPs, and operators did, we moved into early stage projects as well, so pre-RTB sometimes. And then you have to plan for the construction of the park, and you have to ask yourself, like, what kind of security measures do we need? What is sensible? Is a fixed CCTV system really still 2024, or are there better solutions for it? So that's also a question and I appreciate a mixed security and insurance at the moment, but obviously that's one of the main points where there are disputes between the insurer and the operator of the park if that doesn't work well. And the other topic is obviously the theft, the increased thefts we've seen. So we had one particular site in the UK that was then burglarized quite a lot in 1 year. But we've also seen through the bank the Dutch portfolio being affected by a lot of thefts. So we've actually spent the last year on finding a suitable security system that will actually allow us to secure our sites and keep them insurable, to build the bridge to the topic of this webinar. But of course, any solution you can find here is not for free, and that's something that needs to be accounted for. Yeah.
Many thanks for that, Niklas. Jose, just to make that clear, given the fact that Niklas just mentioned, but could you confirm that you do not have any deposits or extra positions in your financial model to cover such sometimes huge investments during construction, or especially as well operation phase? So you do not have a position in your financial model where it says, okay, we have a deposit of 100 or 200,000 euro for potential investments in case of non-sufficient security measures. Is that correct?
Yes, unfortunately, yes. Typically, again, this has to do with the planning at the beginning and then realization of reality. The problem about all this is these projects, they last for, technically, modules can very well be active for 20, 25 years without major problems. Inverters, typically, they need to be replaced or they need to be refurbished. So you already have in the financial models some kind of either a reserve account where you're putting money aside to be able to confront any extra costs that are coming, like 5 years, 10 years down the road, and replace equipment that has been damaged or whatever. And as alternative, you can just have contractor and an operator, so an contractor, or actually the provider of your equipment that can provide a guarantee that the equipment will be replaced on a regular basis. It's some kind of insurance, but from the industry coming. But besides that, specifically to the security systems, etc., that I implemented in a plan, if you don't have them, they're typically not being considered that you may have the cost in 10 years down the road or 5 years down the road. This could be actually put together with a political risk in a way, because if you're in a country where you know that you need to have your security system in place, then you know that this security system needs to be maintained. So you're putting money aside for that maintenance. So that one is already in the financials model, typically. But if you're in a country or in a region of the world where security is a given, and for whatever reason that changes, this is of course a disturbance in the assumptions and in the reality of the project, that it was not foreseeable, and as such nobody was taking it into consideration, neither the equity investors, not the lenders, and even the insurance companies were also not considering it, because they just said, okay, this is the risk today, this is the premium that I need today, whether it changes in the future, let's see what the future brings. So
exactly, and I think you mentioned
long answer to a short question.
No problem. I think you mentioned one of the main topics for our webinar today is it foreseeable? or was it foreseeable? And I think looking in the last 15 or 20 years, I think it was not foreseeable, because when we had a claim, let's say in 2010 or 2012, and even we had a big claim, the insurance market responded with higher deductibles or higher premiums. But at the end, it was not that problem at all. Today, and this is what I would like to ask Niklas, is as I understood you correctly, nowadays, and we will come to your example for the Netherlands, the insurance market did not respond with higher premiums and higher deductibles. They would like to see investments in your security system. Is that correct?
Not 100%. So we had a issue in the UK where that was actually the response, and not in the Netherlands. But I understand. So for now, we've also implemented the same measures in our Dutch parks as well to keep them insurable, because we've heard that in the market it can be quite tough to nowadays get insurance for Dutch parks, and that also comes, like if you go back 3 years in time, the feedback was similar to what you posted today about Denmark, Christian. They said, well, why do we need a fence in the Netherlands? Dutch people are honest people, they don't steal things. And nowadays we are quite happy that we at least have a fence and sometimes one camera on site or more. But we've improved that situation quite a lot in the last 2 years on the parks. So yeah, it's definitely a lessons learned. I mean, it's not only when we talk about security, we don't only talk about insurance, right? It's also health and safety, safe operations of our solar farms. We need to control access and so on. So it's a bigger topic than just insurance. But yeah, it's definitely lessons learned that maybe one camera at the entrance door is not enough to secure a site in the Netherlands, right?
And I think what we should consider as well, and I hope you agree with me, is that theft in general in Europe is an underestimated topic. Not only because of the theft itself, but if we are talking about a bigger theft topic or problem, then we have sometimes a dramatic business interruption claim as well. And given the problems in the global supply chain, especially for modules, but also for substation, where the whole world is running to China and try to achieve the best prices and try to fulfill all their projects. I think this is a combined problem. It's not a theft only problem. It's a problem theft combined with global supply chain, and that you are sometimes not able to get the right things in the right time back to your site. Is that correct, Niklas?
Yes, and I also want to add that there's sometimes a conflict between the general insurance and the business interruption insurance, because obviously the first insurance wants us to repair the site with the lowest cost possible and restore the site at the lowest cost possible. The other one, the business interruption, wants us to fix the site as soon as possible or as quickly as possible. And it might well be the case if you have older sites that the modules are not available anymore. Obviously, the under construction of the park is built to fit these exact modules, so it's sometimes very hard to source modules that fit on it in a sufficient time. If the alternative is to exchange the under construction, which is then more expensive for the property insurance to cover. So there's also a bit of a conflict between those two insurances that, in my understanding, mostly lie with the same company for one SPV. But there's still, differentiating goals, to be honest, between the two, and that makes it very hard as an owner to find the right solution and to know in the end that you are completely insured for what you've done, right? So that's definitely a conflict that we see.
One of my personal reasons for this webinar, but also for shouting out that topic to the world, is the point that Jose mentioned earlier. Shouldn't we say that it's nowadays not foreseeable that something will happen, either with increasing insurance costs or further earlier investments in the plant. Jose, how do you see that topic? So from my perspective, nowadays it is foreseeable that we will have increasing costs on the one side. So it is not that flat line as we had before. And no matter if this flat line is on a high level or by a low level, but I think it is in general not a flat line, and no matter at which level. This is the one point. And the second point is I struggle a little bit with the fact because from my perspective as an insurance broker, it is foreseeable that on the one side we have increasing costs, so not a flat line. And it is foreseeable that we also will have increasing investments in the park, which are not foreseeable in this case where you came in, building the financial model for that. How do you see that?
Yes, well, this is almost a philosophical question. Will we learn
Of
from our
course.
mistakes? Very difficult to answer. I think definitely we need to consider that there is always a certain level of mistake assumptions that we take. And anybody who understands how statistics works, etc., know that even if you have a 99% probability of something happening or not happening, there's still this 1% that when it happens, then you may be ready for it or you may not be ready for it. Basically, studying this is how the insurance companies make the money, theoretically. But in any case, I think what we cannot do on the one side is kill the projects before they are there by sandbanking everything everywhere in the financial model. That's not the solution. But at the same time, we should be learning from what has happened. And we should be understanding, everybody, that there is a sensible minimum of things to be done and a sensible maximum of things to be done. You may be in special situations where, for example, if you're thinking about building a PV plant in some countries in Africa, not mentioning which ones, you may be needing to consider to have not only cameras, but actually to have people, security, with guns. This is a reality. Is this needed in Europe? No. If anybody thinks about having those costs in a PV plant in Europe, I would say they're out of their mind. This is not needed. But definitely there is also, on the other side, you have not even having fences, which, as Niklas was saying before, just for a pure running business activity, you cannot have totally open space, which is holding equipment that in some cases it can be even dangerous for people touching it or being close to it, etc., etc. So there is, as I said, a minimum and a maximum, and somewhere in this range we need to build the financial models and what the situation is today, and give a little bit of buffer. With this, what I say is, well, the banks, they already put the buffer. Whenever you get a financing by the debt sizing, they have the cover ratios where they set a percentage extra of the revenues which are being generated, or the cash flow available for debt service that is being generated. Only a portion of that will be used to pay principal or debt. So that means there's already a buffer for the bank. That's why, as we were discussing in some other situation, when this insurance costs raise, the one suffering it the most is actually the equity investor, not the debt investor. Only in very extreme cases, the lenders start suffering also from lower cover ratios than expected. And in any case, I guess also on the side of the investors, they do their analysis and they do have the targets IRR. And in those targets IRR, they should also do, like many companies do, have a base case, a worst case, and a best case scenario, and understand, okay, as long as I'm moving in range, it's fine for me. So with this sensitivity approach, you can actually already build in some kind of, not necessarily reserve accounts, but security that you're not going to have a business which is actually not making at all. It's making maybe less money than you expected, but still you can keep it running.
I would. Many thanks for that. I fully agree with you. But I would come to my first example again of the guy called me for an insurance 1 week after COD. wouldn't it be the fact, and we are talking today about how to manage rising insurance costs, wouldn't it be good to integrate the insurance market and the broker for special countries, or maybe for every country, not only on the last stage, but with the first investment decision going into a new country or investing in a new park of a certain size? Wouldn't it be good to integrate the broker and the insurer at this early stage? And this is completely different of what we did in the past. But is a lessons learned, or is a lesson learned from my perspective should be to integrate the broker and the insurer at an earlier stage to say, okay, what are your assumptions and experience in that country, and please at least try to guide me a little bit and to support me in this investment decision, and not only placing the risk. Niklas, what's your opinion of that?
Yes, definitely. And it's definitely something we also do. We work closely with our insurance broker and advisors, also in the acquisition process already. So it's definitely prudent to do that, because you can sometimes be very surprised about insurance costs in a market if you don't, do your due diligence properly. And that's not a surprise you want to have. I mean, generally, we don't like surprises when we buy projects, I would say, especially not negative surprises. But yeah, it's actually an area that is, I think, with an easy, it's an easier fix to just get to be aware of this topic.
And what is
and I
your
think that's definitely
experience?
something you need to do.
What is your experience about the success of this early integration of the broker and insurer? Do you have the feeling that it works as you expect, or would you say that there's room for improvement?
I think it works well for us, to be
Okay.
honest. I think it works well for us.
Okay, very good, very good. So I think, and this is maybe Jose, this is you will agree as well that integration of the advisors and bringing together the relevant parties at an early stage is one of the key factor for manage not only insurance costs but managing all different cost position in your financial model. But I think the thing with insurance is that we underestimated this topic at all in the last 10 or 15 years, and that has now become more and more important, and that the insurance topic itself require a place on the table in the financial model right now, right?
Yes, for sure. I mean, there's no question about this. Nicholas already said it. Involving, call it a broker, call it a financial insurance, because it can be both. And actually, it should be both in most of the cases. I think it's key in order to not have bad surprises. And I also think, at least my experience has been in the different companies where I've been working, is that whenever you have one bad experience regarding insurability of a risk of a project, then for the next one you start very early, getting to know what the market is offering, what is feasible, not feasible, and what the prices are. Because this is, I said, if you neglect it, you are endangering the financiability of the product. Not only that, if the risk realizes, you're losing money, you're losing equipment. That's of course there, but this is the pure concept of insurance. And the problem is much more than that, because any lender who is financing a project on a non-recourse basis will always demand that there are enough insurance, and not only for damages, but also for loss of business interruption, loss of revenues, in order to make sure that the plan can still live by itself, even if something happens. So it is very, very important to engage with brokers, especially if you're entering a new market, especially if you're entering also a new technology. I presume batteries, they are coming up like champignons all over the place. Not yet the project itself, development of them. And my advice to any of the developers out there who are looking for this is to also take a look into the insurance that they will need for this, not only because of theft, but many other things, and make sure that those plants are insurable. Otherwise, they will have bad surprises.
and stay insurable. And I think this is one of the main topics for us as well, is that we need to look in the future as well. And given the last 3 years, and when we are talking about another topic than theft, if we're talking about natural hazard risk, then we saw a dramatic increase of natural hazard risk. And I think we should take this in consideration as well, and that not only every developer but also every asset manager should look on the internal insurance costs, and if they are on a low range or if they are on a low level, I think the time is now for try to being a little bit more insurance resilient, just to say, okay, it's foreseeable that this low level, and I expect the overall insurance costs, given the calculation basis, between 1 per mil and 3 per mil in Europe. But this is triple. So I would strongly recommend to the asset managers and to the audience to try to being a little bit more insurance resilient on this topic, and try to pay a little bit more attention on this. One question to Niklas I have is, do you agree with me that also the lenders, when financing the projects, look more and more into the construction and in the pre-construction phase, instead of only focus on the operation phase like it was 10 years before? Is that your experience as well?
I mean, yes, I think that's also become a bit more focused, especially since the old world was mostly buying operational projects already, that have a track record of where you can see how the production was, for example, over the last 5 years or 3 years or whatever. And we are now moving into territory where we don't actually have that track record sometimes for projects, but we still need financing. So that's definitely an area that's coming more into focus.
We got a very interesting question from the audience. I would like to share with you, and I'd like to hand over to you, Niklas, as well. The question is: are there any specific info regarding the drivers of theft in PV plants? Do we have an info about that? If there are circumstances or drivers, what causes the high number of thefts in your plants?
Well, I mean, in the general market, I think there are two pieces of equipment that tend to get stolen when someone breaks into a solar farm. It's either the modules, and with modules, I actually also keep asking myself, if we look at parks from 2014 with very old modules already on them, I mean, yes, they can perform for 25 to 30 years, but still, it's not the newest tech built out in those plants. I also wonder why they are attractive to thieves, to be honest, and I unfortunately haven't been able to meet one of them to ask them the question why they keep stealing this old PV equipment from our plants. And the other bit is the cabling of the combiner, so string cables, but also the general cable of the site. And my understanding is that depends on the prices of the raw material, copper and aluminium. So previously, there were instances where parks were hit with or burglarized, and then they realized it's aluminium cables, and they just turned away because the value of aluminium was just way lower than copper. Whereas where copper cables were stolen in a big way. And then I understand this again. My understanding might be incorrect. I don't moonlight as a thief. That they melt the material down, and that's easier to resell, obviously, than modules potentially that have questionable origin. So that's the two main drivers, I think, is really the equipment and the price of the raw material. Just looking at from the perspective of what gets stolen from a solar plant.
What a personal interest from my side would be as well is you talked about a lot of claims in UK and in the Netherlands, and for the insurer, but insurance broker is always some kind of a risk and insurance philosophy, which security measures how to use in that to use in a solar park, and how to prevent a theft in the best way. And there are different measures and different philosophies in the markets. Did you evaluate for yourself and for your country some kind of an own risk philosophy in accordance to that?
Well, I mean, the first problem is that each solar farm is different, right? It has different equipment on it, different fencing, different security measures, different layout, different access points, and that's one of the key points, the access points that thieves would take, and also exit points. So I understand that they tend to enter on one side of the park and then already have scouted a way out of the park, which is not the same most of the cases, because they work their way through a site. And that's actually something we've analyzed more, and also as a consequence of that, we've moved away a bit from a fixed CCTV system, for example, to a mobile system. So where you have cameras that can actually be moved, so where you can adapt to also new problems. So if they find a new access point that you didn't expect, for example via boat in the Netherlands, also wouldn't be that surprising, a lot of waterways around our solar farms, then we can adapt to it. So I think that's one of the key learnings for me. The fixed systems are good and can work, but they are not as adaptable as we sometimes need to be.
Thank you very much. Thank you very much for your fruitful insights. We got another question, and maybe this is a question for me, but also for you. We are very much focused on thefts in our discussion right now. And the question was how it is about climate change impact. And for me, I can start with answer this question is rising insurance costs is not only relating to theft or vandalism. Rising insurance costs is also related to global supply chain projects, longer delivery times, higher prices, and of course climate change. And climate change, and this is the big discussion in the market, how climate change will affect the solar assets. But from my perspective, from what I learned in my daily business as an insurance broker, is that most of the natural hazard events are related to climate change, and I would not like to take it deep in the discussion if they are climate change related or not. But what we see is, of course, we saw to an very unusual time. We saw snow in Spain. We saw major heat waves in the US. We saw flooding catastrophes in Germany. We saw hail in Italy. And of course, this is the rising insurance costs are not only theft related. It's a good example for showing what the consequences are. But as a look in the future, and this is why I try to struggle this topic, and I would like to get the industry and the financial industry involved in it, is that from my perspective, it is foreseeable that the overall insurance cost, due to whatsoever reasons, will increase. And being insurance resilient and evaluate strategies and how to manage these rising insurance costs, and implementing and involving the insurer in a very early stage is more than necessary now in order to get into problems and trouble in the future. And I hope that Jose and Niklas, you will agree on that. Niklas?
Yes, for sure.
Yeah, definitely. I mean, we see more extreme weather events, and it's an overall problem, not only for us as operators of solar farms, as you just said, Christian. It affects all of us, also all of us living in Europe and wherever will be affected by this trend. And we are trying to do our best to keep the effect as little as possible, I would say, as an industry.
I think, and maybe these are the closing words. I think indeed that as I a little bit pointed out earlier, insurance is requiring a place on the table right now in order to make everyone aware that there is something which can cause major problems, but what is in general avoidable in case you find your own risk philosophy and involve all stakeholders, including legal, finance, and the insurer, to work on a strategy, to work on a long-term strategy and on a sustainable strategy for balancing your own assets. And then I would like to hand over to Selina, who gave us the opportunity to discuss and evaluate these topics.
Thank you very much, Christian. Also, yeah, excellent moderation of this discussion. Thanks, Niklas and Jose, for joining. And for our attendees, we also have a little surprise at the end. Let me check. Can I switch? Yes. So we have a conference coming up, the Asset Management Europe Summit, 15th and 16th of October. Here we will also have a session on insurance, and you will have the chance to ask Christian all your questions you may have. We expect at least 300 attendees and over 60 speakers. And for all attendees today, we're sharing a 10% discount code for this summit. The code is valid for 1 week. So yeah, please, if you enjoyed the webinar, also register for our conference itself. And yeah, that was the closing words. Thanks once again to our speakers, and I hope to stay in touch.
Thank you
Have a
very
good
much.
day.
Thank you very much.
Bye-bye.
Thank you very much. Have a good day. Bye.
Bye.